Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're discussing the clean vehicle credits that are available through dealerships. We'll be covering the clean vehicle credits in detail at Spidell's Federal Tax Update on January 4th and 5th. This 8-hour course will cover everything that happened during the year, and you can see a list of topics covered and get registered at spidell.com under webinars. The Inflation Reduction Act made significant modifications to the clean vehicle credit under IRC Section 30 Cap D and created two additional clean vehicle credits: the previously owned clean vehicle credit under Section 25 Cap E and the qualified commercial clean vehicle credit under Section 45 Cap W. One of the clean vehicle credit changes includes a transfer election that allows a taxpayer purchasing a new clean vehicle or a previously owned clean vehicle after December 31st, 2023 to transfer the credit to a registered dealer in exchange for a financial benefit. Basically, the credit can be applied at the point of sale to reduce the cost of the purchase by the amount of the credit. This program is not available for purchases that qualify for the qualified commercial clean vehicle credit. Taxpayers and auto dealers cannot transfer partial credits. Either the entire credit is transferred to the dealer or none of it is. If the buyer transfers their credit to the dealership and the advance credit is rejected by the IRS, the taxpayer cannot claim the credit on their income tax return. So it's important that buyers who transfer their credit to the dealership receive the IRS's acceptance of the credit at the point of sale. If the taxpayer claims the advance credit at the dealership, but the taxpayer ultimately does not qualify for the credit, for example because of the AGI limitation, then the taxpayer is required to recapture or repay the advance credits they received when they file their income tax return. Dealers are not liable for credit recapture. There's an exception to the recapture rules where a taxpayer elects to transfer their credit to the dealer but doesn't have sufficient taxable income to use their credit when they file their income tax return. In this case, the taxpayer is not subject to recapture. This recapture exception provides an additional incentive for taxpayers to elect to claim their clean vehicle credits at the dealership instead of waiting to file their income tax returns, because the clean vehicle credits are not refundable and unused credits do not carry forward. Taxpayers are allowed to make no more than 2 clean vehicle credit transfer elections per taxable year, either 2 clean vehicle credits or 1 clean vehicle credit and 1 previously owned clean vehicle credit. In the case of a joint income tax return, the 2-vehicle limit applies separately for each spouse. The 2-vehicle limitation only means that taxpayers cannot claim more than 2 advance credits through a dealership per year. Any additional credits are claimed directly on the taxpayer's income tax return. Advance credits received by the dealer from the IRS are not treated as a tax credit to the dealer and can exceed the dealer's regular tax liability and are not included in the gross income of the dealer. Advance credits paid by the dealer to the vehicle's buyer are not deductible by the dealer. They are treated as repaid by the buyer to the dealer as part of the purchase price of the vehicle and therefore are treated as included in the total amount received by the dealer from the sales transaction. Advance credits paid by the dealer also are not includable in the vehicle buyer's gross income. Dealers do not report the credits on their income tax return. The dealer's exclusive method to claim the transferred credits is through the IRS's Energy Credits online portal. Buyers, on the other hand, file an income tax return for the year they claim the credit, even if they would not otherwise have a filing requirement. One of the requirements of claiming the advance credit at the dealership is that the buyer has to attest that they'll file a timely income tax return for the year and report the credit using Form 8936, Clean Vehicle Credits. We covered this topic in more detail in the November issue of Spidell's Federal Tax Letter, including disclosure requirements and the special rules that apply when a clean vehicle purchase is canceled or returned. Get details on subscribing to this monthly newsletter at spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.